Thank you for tuning in to the Doing Business with God podcast.
Hey, you. Yes, you. I am your host, Michi Renee.
It is Michi's passion to help you live your best life and do business God's way. Michi will be talking about entrepreneurship, manifestation, monetization, mindset, beliefs, starting and growing a business, nonprofit, or ministry, all while serving God. So welcome to My Daddy's Business. It's time for the show. It's the Doing Business with God podcast with your host, Michi Renee.
Hello, Tribe. Welcome back to another episode of the Doing Business with God podcast, dedicated to helping you do business God's way. In this episode, I will be talking about the difference between profit and revenue. And if you are like me, the numbers game just gives me a headache. I know in the past that I haven't been a good steward over the money that God has entrusted to me. I have always paid my tithes, given offerings, sowed seeds, helped friends and family members and different people when they were in need and stuff like that. I'm not really speaking of that. I am talking about more of having a budget, following a budget at the end of the month, tallying everything up to make sure everything balances out, both in my personal and private. However, this year I am doing something different and I am staying very close to my numbers. And when I started going through it and looking into different things, I was like, I really don't have a clear understanding of what these terms mean, what the difference is, and how they apply to my business. So when you are looking at your business finances, it's very important to understand the difference between revenue and profit. To accurately manage your company's finances and create an actual budget, you need to be able to differentiate between the two. Most of the time, people do use these terms interchangeably, but revenue and profit are two very, very different concepts. Using these terms interchangeably can almost lead to a critical accounting and budgeting errors, huge mistakes. So when we're looking at revenue versus profit, the main difference is that revenue is income before your expenses and profit is income after your expenses. Without generating sufficient revenue, your business can't make a profit. And you could actually be in the negative or in the red because you have more expenses than you do revenue coming in. Kind of the same thing with your personal expenses. If you have more bills than you do money, then that is financial ruin. So let's take an in-depth look at what revenue versus profit is, how to calculate each one, and why these concepts are important. So what is revenue? Revenue is the income that a business has from its normal business activities, usually from the sale of goods and services, products that are being sold to customers. Sometimes people will refer to revenue as sales. Either way, it's the same thing. Your sales, your revenue, it's the money that you're generating from whatever it is that you're selling. Simply put, it's all of the income your business generates before any expenses are taken out. It is the amount of money your company receives in exchange for goods or services or products. Revenue is typically used to refer to sales revenue. However, it can also include such things as interest from income, rental income, and they are typically accounted for separately. So it really just depends on what type of business you're in as to how those things are accounted and calculated. So calculating revenue is pretty easy. You're going to use the formula revenue equals quantity, so the number that you sold times the sale price. So let's just say, we'll keep it simple. We'll say $10 is your sale price and you sold 10. So 10 times 10, 100. So $100 would be your revenue from selling those 10 items. Revenue is typically at the top line of your income statement. So what is profit? So profit is the financial gain of a business, or the difference between the amount earned and the amount spent in in buying, operating, or producing something. Whereas your revenue is your business's income before expenses, profit is the income that remains after all expenses are accounted for. Expenses can include anything from inventory costs to taxes to rent, utilities, anything that you're paying in your business that actually makes your business operate. Profit is referred to as a company's bottom line or net income. So here is a did you know fact. Profit is not the same thing as cash flow. Cash flow is a separate concept entirely, and we will address cash flow versus profit on a different podcast because that is just too much to digest all at once. And I don't want anybody's eyes stroking out by continuously batting them when I start talking all of the numbers game. Because if you're like me, that will make you check out. I totally get it. So how is profit calculated? To calculate your profit, you're going to use the following formula. So profit equals revenue minus expenses. So using the previous example that we had that you made $100 in revenue, just imagine whatever your expenses were. We're just going to keep it simple and say you had $60 worth of expenses. So you would take your revenue, which was $100, minus your expenses, which was $60. So that would leave you with $40. So $40 would be your profit in that example. So profit is a subset of revenue. To generate profit, you have to generate enough revenue to offset your expenses and still have income left over. I don't know if, you guys have ever seen, entrepreneurs posting that they had a $1.8 million launch and they had all these huge, big numbers of a launch. But what they don't tell you, so that 1.8 million was the revenue that they brought in. But what they don't tell you is the expenses that they have against that $1.8 million. And, they could have ad spend, employees, advertising, marketing, affiliates, whatever it was that they were doing. And, let's just say all of that tallied up to 1.5 million. So they brought in 1.8, but their expenses were 1.5. So realistically, they only netted $300,000 in profit. So the profit is what we want to look at. We don't want to focus on our revenue. Yes, the revenue is important and we do need to know those numbers, but the profit is the number that we want to get to. The expenses are what we can control. And so if that means that we need to, look at our expenses, see how much we're spending, where we may be able to reduce cost, is it time to raise prices, and all of those things in order to generate more profit coming into the business.
We hope that you are enjoying this episode. If you would like to be a guest, check the show notes for all the details. Let's get back to the Doing Business with God podcast with Michi Renee.
I know it may be hard to believe, but there are businesses out there that they don't make a profit. What they have coming in and what they have going out balances out, and they don't have anything left over. You really want to get away from not having anything left over at the end of the month. So you want to make consistent profit. That's why when people ask me what I do, I am a business and monetization coach, and I help Christian women to ditch the hustle in their business to build impactful online businesses to make consistent profit. So I don't say revenue because I want my clients to make consistent profit, not revenue. So if that means that we need to look at your overall business processes, we need to look at your price points, we need to look at your business strategies, we need to look at different ways to bring in additional revenue into your business. And that comes in with a monetization strategy. And monetizing, that means to just bring in cash.